guys, Adam here from DirectionTrader.com. I'm going to clear off my charts here and start fresh and just show you, this is going to be like a basic video on drawing support and resistance, trend lines, whether it be trend lines, Fibonacci's, and so on and so forth in the market. This here is a 512 tick S&P E-mini chart. Basically all I'm going to do is I'm going to start drawing trend lines and show how to use them throughout the day. How trend lines like early in the day may be a sign of what's to come later, and how to use multiple areas of support and resistance to make maybe a setup more viable, for your next trade, or maybe keep you out of a trade. So let me just start drawing a few lines here. This is just basic trend lines. You can see just high to high, and then let's use this here too. This is bam. All right, draw a few trend lines. Just drawing some very basic stuff, guys. And then we'll move forward for intraday stuff. So hypothetically, the market opened up right about here today. So right about here is where the market opened up. Sorry, that line's all crooked. But anyways, market opened up here about 6:30 Pacific. All right. So we created, this line was created basically off of these two lows right here. So right when the market opened, we had created a couple lows there. So what are we waiting for? All right. So what we're looking for is obviously a couple positions, half gaps, and so on and so forth in the market. But moving forward, now that we have created this open and we have a low and another low, now I use a lot of Fibonacci's. Here's a good example how to use trend lines and Fibonacci's when trading. So, and use them as like multiple areas of support and resistance. So obviously we bounced off, we made a Fibonacci, we're trading up now. Normally a person would want to go right in and attack this next Fibonacci level. Yes, there are a lot of strategies built around doing that, but what I'm saying is use the one with the most clusters. So if we were to go from, let's say, the normal, this low to this high, that would make the entry up here a little bit higher, and probably going to get stopped out on that position because my stops fall below the white dash line, or the white line here. So that's the 61.8%. But if you were to take from the lows to the high, now look what we have. We have support here, we have support, or previous resistance becomes support here, and we have the trend line right here holding as another support. So in this area, we have previous support here, or previous resistance turned support, we have Fibonacci support, and we have trend line support. Does that make sense? So that makes for a very good entry level. Moving forward, can we keep doing this? Yes, we can. All right, here's an interesting example here. We have the same uptrend. All right, and now a lot of people are going to be like, oh, it broke this downtrend. Let's get long or get short. Let's sell this. Now that this broke, let's sell it. No, 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 no. It's more of an area that you're looking for. So, say we were to do the exact same setup. Let's look for the most support or the most resistance. So we have this previous low right here, we have an uptrending channel, and we have a Fibonacci retracement level all at the exact same point. Now all these Fibonacci levels probably would work. I'm not sure. I just drew from the low randomly. I'm sure they all have somewhat of a cluster right in there. So does that make sense? You could draw from any of these lows and it would line up somewhat close to this. So basically what I'm trying to do is come up with a better area to enter your enters and exit in order to take less risk and have a better chance of it succeeding. Because not everybody's going to use fibs, not everybody's going to use trend lines, not everybody's going to use whatever it may be. But guess what? If you take all of them and put them into one position, you're looking for the clusters. So in this example we have previous low, so we have support there, we have uptrending support, and we have Fibonacci support all in that area. So there's no way you're shorting at the little break of this trend line. Moving forward, I guess we can come up with more examples. Same thing happens here. Looky here. Another area of support found by this trend line that was basically created at the open today. And then moving forward, oh, what do we have up here? We're trying to trade long, but yet what do we have up here? That happens to be the trend line that we had from yesterday. And that was able to keep us out of going long anymore. That's like a heads up saying, hey, look out, something's happening. And moving forward, I mean, we could draw these all day long, so on and so forth, and then also you can put in price levels. This is a basic video just showing you how to get started on all this stuff. Here's a price level you can put in. Let's do price levels at these major lows. At all these major lows, you can put price levels in, and the lows, and just wait for confluence areas. So basically what I'm looking at here is, all right, we have the market had finally broken down. The market broke down out of this uptrend, right? So now what's next? Well, we can draw Fibonacci and see what's happening. So we have Fibonacci that actually broke, but we do have a little bit of a confluence area right here at the 61.8. Yes, it did get broken, but technical analysis is not an exact science, it's an art. So we're just looking for the area. And sure enough, this was a general area that found a lot of support, and that's where it happened to stop and start working its way back up. And where did it work its way back up to? This previous downtrend. Now, we were actually hitting our head on this previous downtrend, and what do we see happening? I see this possibly rolling down from here and starting to create lower lows now moving forward. Do we know that? No. But what we're looking for is the highest percentage areas. We're looking to not get stopped out so much. We're looking for higher quality entries, and the higher quality entries tend to fall where there's more support and more resistance. So start using more tools than just one. Use trend lines, use wedges, use price levels, use Fibonacci. What I'm saying is try to use quite a few, and just understand how you're drawing them, and then find the clusters. Find where they're all coming together and use that area as your support and resistance. Is that way more people are able to see them, and not just the people drawing one or two lines here or there. So look for the higher percentage setups. Let me know if I can be of any assistance. I run a live trading room at directiontrader.com. Come by, give the room a trial, and I will see you there. My name is Adam. You have a good day.